The latest PPI data out of the US this week has shown a higher than forecast reading at 2.7% for the core, above maximum expectations of 2.3, and 2.2 for the headline, above maximum expectations of 1.8. On top of this, the US CPI data was mildly firmer than markets were expecting, but there's nothing majorly worrying in those numbers. It's been the more dovish Fed rhetoric recently that's increased expectations of the Fed reaching peak rates, which has just helped some of the recent dollar strength to unwind. Now, on top of this, the news that the China State Fund is buying bank shares is also potentially supportive for the Australian dollar. So a potential reversal in the Aussie US dollar can't be ruled out over the next few weeks, particularly when you look at the latest COP report data and you see that the dollar longs are very stretched to the upside and the Australian dollar shorts are very stretched to the downside. So this Aussie US dollar weakness could quickly reverse, and the recent dovish Fed rhetoric could be a significant catalyst. And if there's any more stimulus support from China, that could help the Australian dollar strengthen. So when you check out the seasonals, there's an interesting pattern ahead. Aussie US dollar has gained over the last 22 years for 72% of the time, for an average return of over 1%. So will the seasonals play out regardless of the slightly firmer than expected CPI print on Thursday? Major trade risks. The major trade risk here, of course, is that there's more negative news for China and inflation is stickier. The US labor market is stronger, and if the Fed has to keep hiking rates more aggressively, then you could still see some more Aussie US dollar selling. Remember, don't just trade it, Seasonax it.